Alright guys, so the meltdown has begun. Now, a week ago, we told everyone to brace for impact, that we need to work on the assumption that Donald Trump is very serious. And as we speak, the US markets, the S&P, has officially entered correction territory. Now, we are more than 10% down today and it's probably going to get worse. Now, Trump is moving ahead with his tariff war and he dropped a big shocker on the world. Now, we knew this was coming and the scale is something we have talked about endlessly. The US reciprocal tariffs are going to affect all countries. So it won't be limited to China, Canada, or Mexico. It also won't be restricted to just steel, semiconductors, or pharmaceuticals. Everything could be targeted and the pain might be coming as soon as tomorrow. The global economy is on fire and we are being thrust into a world where supply chains everywhere are about to be fractured. Gold prices are also screaming how unprecedented and volatile the economy is today. We have broken past $3,100 an ounce. Now, tariffs are going to raise prices, but because this is extended throughout the world, there are very few assets people can run to. Stock prices are driven by earnings, and if the US and the world starts trading less with each other, the revenue of companies will start to collapse, but yet people's purchasing power is dropping at the same time. What gold is signaling is the extreme risk of the US economy and the entire world slipping into stagflation. On one hand, we have growth grinding to a halt or even a recession, and on the other, consumer prices for everything will start to heat up thanks to trade barriers. Now, I want to be clear here. We might eventually get disinflation where prices could collapse subsequently, but it won't be due to expansion in the global supply of goods. It's not a good thing. It will be from a global recession where everyone gets too broke to buy anything. Now, there was initial hope that Trump would limit the scope. Besson was talking about hitting their list of greatest offenders, the Dirty 15 as they call it, but it's now apparently everyone. His reciprocal tariff will start with all countries, so the whole world could face big trade barriers trying to export into the United States. And it doesn't matter if you have a big trade deficit with the US or surplus. Trump wants to force the world to tear down the tariffs on US goods. Now we have to work on the assumption that he will go pedal to the metal. The US trade deficit is so humongous that you need shock therapy to flip the script. And the fastest flip you can do is to hit the entire world at the same time. Now Trump likes to negotiate from a position of strength. It's basically the art of the deal. Hammer everyone first, and when they are weakened, you can then impose your unreasonable demands. And let's understand the scale and deep dive into it. Many countries have tariffs on US goods. All the nations in blue, pink, and yellow they have imposed import taxes. Canada, China, and Mexico have already been punished. Countries that are on the hit list would most definitely include Brazil, Russia, the EU, India, and Southeast Asia. And as a whole, the entire of Asia is going to be punished. Many of these economies are emerging countries. They still need to sell to the US to bring in revenue, especially dollars. Now, the whole world still runs on a dollar system, like it or not, and if Trump goes ahead and punishes them, we could have yet another currency crisis on our hand, very similar to 2022. But which countries are the most exposed? And this is where we measure the trade weighted average duties, which is the actual tariff rates across all volumes of product imported into a single country. Now, broadly speaking, Korea, India, Vietnam, and Brazil, they are at massive risk. They have big tariffs on global exports coming into their countries to protect their industries. Korean tariffs are above 8%, for India it's a whopping 12%. We can fully expect the United States to target them with reciprocal tariffs. This is basically a broad net to force better trading terms for American exporters. Trump wants to ramp up US goods production throughout multiple sectors, which means he will need global outlets to sell the goods to. There's only so much American consumers can buy on their own, and there is an urgent need to drop the trade deficit. Now, his justification is simple. He wants money to flow into the US to preserve jobs. And once we understand this, the next criteria of the reciprocal tariffs will be countries that have a big trade surplus with Trump's economy. Now, these are the top 10 countries the US has the biggest trade deficit with. And let's exclude China, Mexico, and Canada because they've already been hammered by Trump. Now, countries like Taiwan, Germany, and Ireland would most definitely be targeted. But Vietnam, South Korea, and India could see bigger tariffs imposed on their exports. They have both a big trade surplus with the US and also the highest trade weighted tariffs of their own. Their economies could be the most affected from April 2nd onwards. Realize that this is not from a position of strength. This is a very desperate move to corner the world economy and to steer the ship away from the iceberg that is only 100 meters away. The US economy will still get clobbered and it won't be pretty. In fact, many estimates conclude that the United States will suffer the most, and we have to take this very seriously. According to the IMF, the world as a whole could suffer a GDP drop of 0.6% through 2026. Of all the major economies, China would be the least affected, but the biggest casualty will be the US. Adding the tariffs with the trade uncertainty, US GDP could crash by over 1%. Investors understand this. Under a trade war regime, the US can't possibly grow their economy like before. Countries themselves would also retaliate and stop buying US goods. And all these pressures will weigh heavily on economic growth. And these are just the base effects. That's why the market had a nasty sell off yesterday. By imposing reciprocal tariffs on the world, Trump is going to raise the overall tariff rate in the United States, which means every product on American shelves, well, they're going to get more expensive. Goldman expects the average US tariff rate to rise by 15 percentage points in 2025, and that's 3 times higher than their previous baseline forecast. At the start of the year, the average US tariff rate was around 3%, and if you slap on a 15% increase, consumers could face at least a sticker shock of 18% or higher. And to the average US person out there, it simply registers as higher inflation. And because of this, global banks are all raising their recession forecasts. Goldman is now at 35%, while JP Morgan believes there's a 40% chance of the US economy contracting. And if you're wondering why the stock market is crashing, it's because of this. We are witnessing a big scrambling in the market to desperately reprice US equities. All the earning multiples out there, they are being hammered down because the tariff war is escalating much worse than what people expected. Now, of course, on this channel, we have said many times we have to take Trump very seriously because the US, well, they're out of options. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. But the market is still underestimating Trump. This chart shows us the latest expectations of US tariffs around the world. As a benchmark, 7 is Trump's campaign pledge of 60% tariff on China and a universal tariff of 10%. The March 2025 expectations are still below 6, which means the world still thinks Trump won't go all the way to town with his punishments. Now, how bad the collapse will get depends on how crazy the US trade war gets. If he starts targeting more countries and throws even more sector-based tariffs into the mix, we could see global markets get a massive shock. Now, over the last 2 months, there were many clues that Trump's agenda is to reindustrialize the US. Whether that will ultimately work is up for debate. However, to speed run to the finish line, the only method left is a global tariff war that terrifies global exporters to scare them into submission, and it looks like Trump is getting his way. On Truth Social, Trump's post today is basically a victory lap. Global companies are looking to expand in the US. Manufacturers are also pouring in billions to avoid the tariffs. 100 billion from TSMC, 500 billion from Apple, and 20 billion plus 10,000 jobs from the French shipping company CMA CGM. Even Honda, Nissan, and Hyundai, Japanese automakers, are looking to shift production to the United States. And is this really a victory lap? Not really, because all their goods will be more expensive at a time when US consumers are broke. Who's going to absorb the higher cost of production? Can the US consumer buy more expensive cars and iPhones, or will they simply walk away? US stocks are already heavily overpriced and now they're crashing hard. This is alarming because a lot of household wealth is tied up there. The S&P has crashed by over 10% in Q1 this year. It's the worst performing quarter since 1988. And let me repeat what I just said. It means US equities crashed very hard over the last 3 months, more than during the dot-com bust, the '08 mortgage collapse, and the 2020 pandemic. And after those crashes, we had at least another 3 months of further price declines. And if history repeats itself, stock prices could continue to go lower. And unless Trump does a sudden U-turn, we might have more downside surprises coming for us. So how far can the markets crash? Well, there are only 3 levels left to support the S&P. One at 5,400, another at 5,200, and the 5,000 mark. The timing is already horrible. This crash is coinciding with a ton of options expiring. The longer the stock market stays down, more equities could be dumped by banks and market makers to avoid a loss on their positions. So in a worst case scenario, we could see the market keep breaking support levels one by one over the coming weeks. And if we enter a big capitulation event, which would equate to at least another 10% downside, well, we have no idea how low things can go. In other words, we are already sitting on a powder keg ready to explode. What's important here is the reverse wealth effect. American families today own an enormous amount of US stocks. Households have over 170% of disposable income in US equities at the end of 2024. That's a lot of wealth tied up in a single market that is crashing lower almost every single week now. The bigger this fall gets, we could see less spending in the real economy because people simply feel poorer. Consumer spending today is propped up by the richest 10% of Americans. The middle class and the poor, they're getting even more hollowed out and they aren't really spending today. And it's these big spenders who are the most exposed to the US stock market. They own the lion's share of equities, and the S&P collapsing will only crush the sentiment of America's biggest spenders. So now prices are heading up by 20% from the tariffs, while people's overall wealth is starting to fall thanks to the trade war and the markets falling. It's a double whammy that we simply cannot ignore. It used to be the economy that affects stock prices, but it seems to be working in reverse for the United States. It's really Twilight Zone economics. And before you say that Trump will save the day, let me just end this with Scott Bessent. He reminded us that the stock market is not a concern for the Trump White House this year.
Sarah, what we're focused on is we're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? I think, having been in the markets for 35 years, I know the market is prone to big unwinds like this. I think we've seen a lot of position unwinding, and I can't really speak to that.
I guess, and this has been consistent with your view, but 62% of Americans own stocks. I mean, it's near 20-year high. So how can the White House not be concerned about hardworking Americans' 401k plans?
Look, Sarah, I didn't say we're not concerned. I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky.
So hang tight, guys, and fasten your seatbelts. We are already in the danger zone, and this trade war could reach new ballistic levels really soon. But let me know what you think. How much further will the markets collapse? And will Trump go all the way or backpedal on his tariff war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.